Howdy traders, and welcome back with another video from the FX Big Dog. In this video we're going to be talking about the pound crisis, and the reason why is because the Bank of England is coming together tomorrow to make a decision on the interest rate. They expect to keep the rates unchanged at 0.75%. How is that going to affect the markets? Well, we're going to go ahead and take a look at the technicals right after this. Yeah, that's right, traders. The Bank of England is going to get together tomorrow and make a decision on the rate decision, or the rate, and it looks like they're going to keep the rates unchanged at 0.75%. Now, like I said before, why would that affect the markets? Well, at the moment right now, I believe that if they keep the rates unchanged, that's not going to be a good sign for the UK. At the moment right now, all the central banks are cutting rates. The only bank that's not looking to cut rates is the Bank of England. And so if that's going to be the case, what can we expect out of the pound crisis? Well, let's go ahead and take a look at the technicals and figure out what the deal is. All right, so I've got the pound. This is the pound JPY open right here. Now, every part of the daily time frame on all the pound crosses are showing the same sort of setup. In fact, if you take a look over here on the pound JPY, you'll notice that and for those that don't know what type of trader I am, I'm a trader that likes to trade market cycles, which means that I like to go ahead and buy dips and sell rallies. Now, if that's going to be the case, then what I'm going to be looking for over here on this particular chart, I'm going to be looking for an opportunity to go ahead and buy on dips. So every time the market dips, I want to go ahead and buy. That's the idea. And so what's happening right here, traders, we have resistance. Price is now pushing the market down, or at least pressure is pushing the market down. And we've seen that we're getting a lot of selling pressure off the pound JPY, which means that pound JPY is expected to dip, but then eventually go ahead and rally again. Now, if we go ahead and take a look at a deeper look over here, take a look over here. My cycles work this way. All right, we have a wave 1, 2, 3, 4, and then 5 up here. Once we get to wave 5, then I'm expecting the market to go ahead and retrace into an ABCD correction. Now, if you take a look over here, this is a very shallow ABCD correction. And the reason why I've got a shallow ABCD correction is because you see these two channels right here? I'm expecting price to go ahead and find support there and then work its way back up north. So I'm expecting pound JPY to still continue to rally, but at the moment right now, I'm expecting a dip. Now, keep that in mind, because as I go into the details of every other currency pair that's traded against the pound, you'll see almost the same sort of setups. Now, I'm telling you right now, if the market's going to go ahead and break out of this consolidation and break out to the north side, then I'm probably going to look at this type of pattern. And this is called an irregular flat. When the price does this, dips down, and then goes up, and then eventually comes back down again, we're currently trading right about here. So if we do see a rally up past the highs, which is over here, if I see a high past that level right there, I'm anticipating the market go up to what's called the 127. There it is, 127, and then go ahead and come back down into the AB boundary for a deeper retracement. Now, that's what could happen. But based on the news, based on what's happening right now, if they keep the rates unchanged at 0.75%, we're going to see possibly the pound crosses starting to fall. All right. Now, this is just the one pair. Let's go ahead and take a look at the next pair. And I'm going to go ahead and flip over to, let's go ahead and grab another pound cross right here. And I'm going to go to pound Aussie. Now, excuse me. Now, if you take a look over here on pound Aussie, this again, once again, is a daily time frame. Pound Aussie's set up a little differently. All right. If you take a look over here, we've had our wave cycle go up here. Then we've had this third wave move going up here to the top. We've had a retracement move down here. And so therefore, we're expecting price to move back up. Now, what's happened over the last couple of days is we had some good news coming out for the rate statement for the Aussies. And Aussie strengthened against a lot of the currency pairs. And that's what created this little dip going down south here. But we've had, and by the way, this is the last few days right here. So there's not a lot of movement over the last few days, but yes, we've seen a fall over probably the last couple of weeks down, heading down south right here. Now, the point here is that we've come back to this level of support. If the pound does lose grounding tomorrow, which we could be expecting it, if it does lose ground tomorrow, we could see a further dip down to come back up to my next support level right here before price moves back up again. So I'm not going to react. Well, you know what? Let me do this. Let me not discuss what I'm going to be doing right now. Let's first go through the other pairs and check that out and see whether or not they all lined up in the same direction. And if so, we may have consensus across the board what the pound crosses are going to do. So let's go ahead and take a look. So if I look over here on this is the pound Aussie, right? So we've got the pound Aussie set up right here. Let's go ahead and move over to another currency pair. Now what I'm trying to do is I'm trying to give you a little bit of repetitiveness, right? To be able to see what the markets are doing across the different currency pairs. Instead of just taking one currency pair, I'm looking for a repetitive pattern across the board. And what I'm seeing right now is everything's pointing that there is a possibility of pound dipping. So let's go to, this is going to be pound Canadian. Now, once again, traders, look at this. See how the market's created this ABC right here? Here's A, B. Now we're looking for price to move down and then move back up again. All right. Again, looking at that sort of setup. This is pound Canadian. Also anticipating a possible dip. Let's go to a pound Swiss franc. Need I say anything more? Take a look over here. Same sort of pattern. Looking for price to go ahead and form this ABC correction pattern right here. And if that's going to be the case, then what can we expect? Pound weakness tomorrow. Now, I get it, traders. I get it. There's a lot of consolidation right here. All right. Especially after they mentioned that we're only going to see sort of Brexit come to effect. And, well, more discussions around Brexit around about the 12th of December. But at the moment right now, we definitely have the market moving sideways. And the news coming out tomorrow for the pound rate decision may go ahead and break out in a direction and then come back up again. So we could get a choppy day if it's going to break down south and come back up again. But we're definitely looking for a bearish move on pound Swiss franc as well. So pound Swiss franc also looking for a dip to the downside. Let's go take a look at pound New Zealand dollar. Pound New Zealand dollar, the same thing. Look at my waves going up. Wave 1, 2, 3, 4, and 5. Now we're looking for an A. And let's go ahead and find that B. B is going to be up here a little bit. And then we're looking for C coming back down. Maybe possibly come back to my red channel right there. All right? As I call my wave channel. So we've got a signal channel. We've got my wave channel right here. And we're looking for the market to go back up again. So this is the type of action. A little bit of movement up there, then down, and then bullish again. All right? So this is what I'm expecting to come out tomorrow. I'm expecting that bearish move and the news out tomorrow. Now let's go to the last and final pair right here on the pound crosses. It's the pound US dollar. And let's see if we can see the same sort of repetitive patterns. Now, I haven't listed out my waves on this, but you can see with my fibs, right, that I put in here, the Fibonacci's that I put in here, I'm expecting the same thing. This is going to be wave 1, 2, 3. What are we looking for? Wave 4 and then wave 5. Now, all right, so this will be my wave 4. So I'm looking for a dip first before the rally. A dip before the rally. And then we could go ahead on pound US dollar, we could reach around about the 132.18 as the market starts heading to the upside. So again, traders, we're seeing the same sort of repetitive patterns across the board. That all of the pairs are saying that, yes, we're expecting some sort of correction. And again, very, very important that you realize that the retracement that we're looking for, the correction that we're looking for, isn't going to be a long-term correction. We're looking for some short-term corrections, and then the market's going to find support and then turn around and go back up north again. Now, what could happen is we could have a breakout to the upside if the news is something different and positive for the pound. We could get a breakout to the upside, and that's fine. All right, that is fine. The thing is right here, because I'm a swing trader and because I trade these different waves, what I'm going to look for is buying on dips. And so as a swing trader, I'm looking for the market to dip before I can go ahead and buy in. You see, the problem here is if I don't do that, if I don't decide, if I don't get in on a dip, all right, allow the market to dip down first and get in on the dip, what I'm doing is I'm putting myself at more risk of being stopped out multiple times before the market actually goes ahead and moves north. So what I'm looking for is the best place to get in is when the market dips down lower. So you're buying low and then looking to sell that price again a little bit higher. And that's exactly what I'm doing here on the chart. Nothing more, nothing less. Just looking for the dips and so on. So if a trader asks me today, Gary, what do I do on this trade? Do I just go ahead and look to put in a buy entry point just above that resistance? I don't like those type of things, especially when it comes up to news, because this is what can happen. The market can go spike up, spike down, and it just can eat you up all day long. And so I don't like to trade what we call a straddle trade, right? I don't like to straddle the market when the markets are sitting in a consolidation level with news coming out. Especially lately, over the last few years, it just hasn't been the same. You know, back in 2003, 2001, when I traded quite a bit of news, and we used to do that. We used to straddle the market on the tops and highs, tops and lows of the market, and look for the breakouts and trade that and move our stops up tight to protect the position. It doesn't work as well this time around. In today's market, it's too choppy. The news is just too choppy, and the brokers increase the spreads, and that really creates a problem for traders that are trying to scalp the market, because the spreads become from 2 or 1 pip spread to a 10 to a 15 pip spread, sometimes even a 25 pip spread, depending on what news came out. So that's definitely not the option. So moving into swing trading, all right, swing trading news, what we do is we wait for the technicals to line up, and then we trade it. Now, if the market went ahead and did this, if we had a dip down south, if the market did this and it was down here by tomorrow morning, which I doubt that's going to be the case, but if it was down here, I would be looking to buy in on the first move going to the upside. So I would still be waiting for confirmation to get in, and that would be a conservative approach. If I was a little bit more aggressive, I'll be looking for price to come back to retest the previous high, and then when it comes down to the previous high, I'll be looking to buy in right here with my stop losses way down below here. You see, now the thing is, if I wait for the market to go ahead and rally first, all right, if it does this and starts rallying, and I get a good confirmation right here that price is moving up, then I can go ahead and tighten up my stop loss and then follow the trend going up based on that. So I'm getting it on the move. It may be a little late, but it's allowing me to put a tighter stop loss so I can protect the position at 1, and 2, go ahead and keep it tight so that my risk-reward ratio is going to be greater. And those are the things that we're going to look for on the trade. So ultimately, traders, if you actually look at how the way the market's set up right now, as a swing trader, I'm going to be on the sideline, wait for the news. As the news comes out, we'll make a decision. And if I do get the news following exactly where I'm anticipating the market to go, which means a dip, that'll create great opportunities for us maybe on Friday, come Monday, Tuesday next week, where we're going to be looking for the market to go ahead and find the support right here. And when we've got that support down here, we're going to be looking to buy on the support, look for the market to go ahead and rally up. And that will be the ideal trade, but it's not going to be before the time. It's probably going to be, let's say, on Friday, not a good idea, but maybe Sunday evening, Monday would be a great opportunity for us to start looking to buy in on the move going back up north. So traders, that is the long and short with the, excuse the punt, long and short with regards to the pound crosses and what we're going to be doing as swing traders as we start approaching the Bank of England rate decision tomorrow. Remember, traders, they're keeping the rates unchanged at 0.75%, which doesn't look positive for the pound. We're expecting a dip on the pound, and then once the dip takes place, then the opportunity comes for us as swing traders. We'll be buying on the dips, looking for the market to rally back up again. Traders, hopefully that information has been useful for you, and I want to go ahead and make sure that everyone is subscribed to the channel. If you haven't already, please go ahead and do so, and I'll see you back in the next video. This is Epic Big Dog, signing off.